Today, we're breaking down what we call the financial fortress strategy. This is a layered structure that many entrepreneurs, investors, and self employed individuals explore to help organize business operations, investment activities, retirement savings, and asset separation. An LLC or limited liability company is a legal entity used by business owners and investors to separate activities, assets, and operations from themselves personally. Think of an LLC as its own legal container. The container may open bank accounts, hold investments, operate businesses, own property, sign agreements, receive income, and pay expenses. For many entrepreneurs, this creates organization, operational separation, and potentially liability separation when structured and operated properly. One thing many experienced investors do is separate activities into multiple LLCs rather than placing everything under one entity. For example, one LLC may hold rental properties, another may operate an online business, another may handle consulting or investments. This can help organize activities separately and potentially isolate operational risk between entities. And that is why Wyoming has become one of the most popular states for LLC formation, especially among investors and entrepreneurs. There are several reasons for this. Wyoming is known for stronger privacy advantages compared to many other states because less ownership information may become publicly searchable. Wyoming also tends to have relatively low annual costs and simple ongoing maintenance compared to many other states. Wyoming currently does not have a state income tax, which is another reason some entrepreneurs and investors consider using Wyoming entities. This is where the financial fortress concept becomes very powerful. A solo 401k is a retirement plan designed for self-employed individuals or business owners with no full-time employees other than a spouse. The business entity may sponsor the solo 401k, allowing the business owner to potentially make contributions into the retirement plan. In many structures, the retirement assets are owned by the retirement plan itself, not personally by the individual. That distinction is important because retirement accounts may have separate protections under applicable federal and state laws depending on the situation. Some investors then use LLC structures beneath the solo 401k for organizational and investment purposes depending on how their structure is designed. This is often discussed in checkbook control style setups where the retirement plan owns the LLC. When properly designed and operated, these layers may work together like a financial fortress. You potentially have business separation, operational separation, separation, investment flexibility, privacy advantages, and asset organization. Instead of everything being mixed personally, the structure becomes layered. At Survival 401k, we help educate clients on solo 401k structures, checkbook control concepts, LLC integration strategies, and self-directed retirement investing. Our financial fortress approach focuses on helping entrepreneurs and investors understanding how these layers may work together for long-term wealth building and organization. If you want to learn more about solo 401ks, Wyoming LLCs, and self-directed investing or building your own financial fortress, make sure to subscribe, like the video, and leave your questions below. Thank you.